It's Thursday, October 12th, 2023. Please make sure to like this video, make sure to share this video, and make sure you subscribe to this channel. Hit that notification button down below. Make sure you are subscribed. Make sure that you are staying awake and aware of what's going on. And we've really got to stick together. I appreciate the comments down below. They're incredible. So many bright people, so many people with so much knowledge, so many people who are thinking for themselves. So keep the comments coming, keep sharing the videos, keep subscribing. But without further ado, let's get right into what's happening today. I jotted down a bunch of notes. I printed up a bunch of articles. I want to share this with all of you. Feel free to comment down below on anything you want to comment about. Those comments are extremely important. But markets today across the board were down. Dow Jones was down 173, NASDAQ down 85. My question to all of you is, why weren't the markets really down today? We should, in my opinion, we should have seen the Dow Jones down 1,000 points today. NASDAQ should have been down probably 500 points today. And I say this based on this. Look at what's going on. Look at the auto strikes, and we'll talk more about this. But we've got massive auto strikes, inflation climbing. We've got war. We've got housing sales collapsing. Commercial real estate is collapsing. It's in a complete full-blown depression. Mortgage rates nearing 8%. Yet the Dow Jones only down 173. I don't understand that. These markets are ignoring danger. They're ignoring the risk. They're ignoring inflation. They're ignoring war. They're ignoring everything. And so we continue to see this massive disconnect between Wall Street and reality. These markets make no sense. This to me just again reinforces with you and I that they're extremely manipulated. You cannot base any reality now on these markets. There are no fundamentals in these markets. Now let's take a look at inflation today. Inflation rises more than expected in September as high prices persist. This on Fox Business. CPI rose 0.4% on the month and was up 3.7% year over year. Real average hourly earnings fell 0.2% on the month, but were 0.5% up, 0.5% year over year, if you believe that. I will say this. I don't think anybody believes that we're getting to 2% inflation anytime soon. Not going to happen. But here we go again. Another month where inflation continues to climb and people are feeling the pain. Here's one on wallstreet.com. This was really interesting. Acceleration of inflation continues. Core services inflation spikes despite the massive health insurance adjustment. This is where it gets very interesting. Health insurance CPI collapsed by 37.3% year over year. Today's CPI release is the last month with that adjustment. With the October CPI to be released next month, the health insurance CPI will flip, adding further momentum to the CPI readings instead of pushing them down. So they're already warning you that we're going to see CPI increase next month. And so inflation's not going away anytime soon, ladies and gentlemen. And the question is now, how bad is this going to get? Now remember, we're now possibly in two wars. We're going to be printing a lot of money, and this is going to cause more inflation. Switching gears here, let's go to mortgage rates. Mortgage rates hit 23-year high and home prices show few signs of cooling, but Redfin says all hope is not lost. Here's what Chen Zhao of Redfin said. Inventory is getting better, and over time, people can get used to these high rates. People are just going to get used to the high rates when they don't have a job, when their real wages are going down, when inflation is going up, when gasoline prices are going up. These people are out of their minds. No, Chen, people are not going to get used to these high rates, not at these high prices. Prices must come down. Listen, if prices come down, people can deal with 7, 8, 9, or 10% mortgage rates, but prices have to come way down. But people are not going to be able to adjust to these prices at these rates. It's not going to happen. And this is why prices are going to be forced, yes, forced to come down. And I will say this today, as you know, I don't give financial advice, but this is the worst possible time to buy a house. UAW orders 8,700 employees to walk out at Ford's Kentucky truck plant, shutting down the plant. This is the 27th day of the strike, and things are getting worse, ladies and gentlemen, but the stock market doesn't care about another 8,700 union workers going on strike. Now, this plant manufactures the Ford Super Duty trucks and the Ford Expeditions. 8,700 people just walked. And these people, I mean, how many people are going to lose their jobs at these auto manufacturers at some point? You know what they're going to do. There's a lot of people coming into the country. A lot of these people will take these jobs. They're going to work them for a lot less money. A lot of these plants are just going to move down to Mexico, which they're already there, but they'll move more production down in Mexico. And at some point, you're just going to see them just fire, let go a lot of U.S. workers. So let me know what you think about that. Look, I'm all for people making more money. Yes, I do believe these CEOs are not sharing the wealth, that's for sure. But, you know, when I start hearing that, you know, they want a 40% increase and they want to work 4 days a week, and, you know, this is all very, very confusing. At the end of the day, the workers are probably going to lose. The consumer is probably going to lose. The quality is probably going to lose. It's just a real sad state of affairs, ladies and gentlemen. But we're going to see more jobs because of these unions, too. They're going to force more jobs out of the U.S. I think that there's some pros and cons of unions, but it seems to me that the unions have done a big disservice throughout the years to the American worker. But that's not up to me to decide. Flexport is laying off 20% of its workforce. This is the supply chain software startup. So there's 20% of their workers being let go. Getting to 2% inflation won't be easy. This is what will need to happen, and it might not be pretty. This on CNBC today. What's going to happen and what they need to do is they're going to collapse the housing market. That's one thing they're going to do, and they're going to cause a depression. That's what they're going to do, ladies and gentlemen. Now, here in the article, it says that they need to cause a recession. Well, that's impossible because we're already in recession and it's not working. So they're going to cause a depression. They're going to slam the housing market and slam the brakes on that, and we're going to see big changes coming to the economy and to the housing market. Now, this was an interesting article on The Hedge today. What do U.S. teens want to be when they grow up? This was very, very interesting. It says right here, 13 to 17 years old. They divided it between male and female, 13 to 17 years old. The number one thing that the male teenager wants to be is a pro athlete. The number one thing that the female 13 to 17-year-old wants to be is a nurse or a doctor. The second thing that most teenagers want to be, this came number 2 for males, YouTubers and streamers. Number 2 thing for females 13 to 17 years old was being an actress. Number 3 for males, musician. Number 3 for females, musician. 4, professional gamer for males. 4 for females was being an artist. And then 5 was a doctor, nurse for males, YouTube streamer for females. Now, what I find really interesting here is when you look up China, what do Chinese teenagers want to be? Most of them, more than half, male and female Chinese teenagers wanted to be astronauts. Many wanted to be engineers. Many wanted to be doctors. But the number one thing was astronauts. And so I look at the U.S. teenager, YouTuber or streamer, an actress, a musician. Most children don't play instruments today. Most children are completely out of shape, but everybody wants to be a pro athlete. It's interesting, isn't it? It's an interesting dynamic here, looking at Chinese teenagers wanting to be astronauts and engineers, and U.S. teenagers wanting to be streamers, YouTubers, actresses, and artists. Nothing wrong with that, don't get me wrong, but I thought it was interesting. Especially when we talk about the future of these countries. Let's talk about where will America be, say, in 20, 30 years if everybody wants to be an athlete and a YouTuber versus engineers and astronauts. Who do you think is going to be the world superpower? Something to think about. Let me know. Let me know your thoughts on that. Here's another one on the hedge. This was interesting. From culinary arts to cognitive science, the median student debt for every U.S. bachelor's degree. Now, I'm not going to go through this whole thing, but to give you an idea here, if we look at these bachelor degrees and what each student owes, behavioral science degree, $42.8 thousand of debt for a behavioral science degree, a bachelor's degree. Religious education, $32,000. Human services, $28.6 thousand. Culinary arts, $28.6 thousand. Literature, $27,000. Music, $26.6 thousand. Arts and entertainment, these are bachelor degrees. Arts and entertainment, $26.5 thousand in debt. Drama, theater arts, $25.6 thousand. Foods and nutrition, $25.2 thousand, and social work, $24.9 thousand. These people that took on all this debt for a bachelor's degree that pays $34,000 to maybe $46,000 a year before taxes. These people, I mean, what a waste of time, what a waste of money for most of these people who went on to go into debt to get these bachelor degrees in these areas. Unbelievable. This is why I don't see the economy improving. This is why I don't see the consumer improving, because there's just too much debt out there and there's no way to pay it back. I mean, try getting a job in some of these sectors. And what do most of these sectors even pay? I mean, some of them, the highest ones I saw were about $46,000. I mean, what are you going to make in religious education, social work, foods and nutrition? I mean, it's unbelievable. But so many people have been bamboozled and fooled and just sucked into all this, and now there's no way out. And these people have acquired so much debt, and now we're heading into a very, very serious depression, and people are loaded with debt. Not a good thing. Bond bubble bust keeps getting uglier. Banks are tightening and becoming much, much more cautious, ladies and gentlemen. So it's going to become much more difficult for individuals and businesses to access credit. And this is going to hinder the economic growth and recovery of the United States. We're not only going to see individuals and businesses in trouble, we're going to see a multitude of countries in trouble because the cost to borrow money has gotten so expensive. And how do these countries feed themselves? How do they buy food and oil? I mean, this is going to be a big problem, especially for emerging markets. I read this stuff and it just reinforces with me personally why I own gold, why I continue to buy gold. We're going to see more nations added to the BRICS. Now we're talking about more war. And this is going to be, to me, not strengthen America. It is going to weaken America. And the weaker America gets, the weaker the faith in the US dollar gets. And where do you think these countries are going to look to? They're going to look to gold as a global currency, or backing some global or multiple global currencies, but it must be backed with something real, something solid, something physical, something with history. And in my opinion, it will be gold. And I'm reading this article today from marketsinsider.com. It's titled, Global Central Banks Are Hoarding Gold Like Never Before as They Seek to Reduce Over-Concentration of Dollar Reserves. This war is going to bankrupt an already bankrupt nation called the United States of America. And as we become more crippled and more bankrupted, the dollar is going to be done. I do hold dollars. I think it's important to hold dollars right now. I'm not saying this is going to happen tomorrow or next week, but you have to be aware that we are going through a change, a process right now, and you've got to evolve with this. You cannot just be holding paper and think that you're safe. This is happening right now in real time. I think it's extremely important to be holding gold. If you need a good place to buy, go to my link down below. SD Bullion. I've been dealing with them for 5 years. Fantastic company. I highly recommend them. And if you already deal with somebody or you know of a company that you trust, that's the main thing. Make sure you trust the people, the companies that you're dealing with. There's a lot of good companies out there. You don't have to just listen to me. There's a lot of good companies out there, but make sure you're dealing with somebody reputable. I deal with SD Bullion. You can go to my link down below and you'll have no issues with them. But I think it's extremely important to be holding some gold right now. That is not financial advice. That is what I'm personally doing. That's what my circle of friends are doing. That's what my family is doing. And you can see the writing on the wall right now. And you've got to be diversified, and you have to be owning real things right now. So with that being said, I'm going to wrap this video up. But I'm going to cut this video for a second because I want to show all of you something. I went to the grocery store yesterday, and I just want to show you something really, really quick before we end this video. Hold on one second. Okay, so I'm back. I wanted to show all of you this. I went to the grocery store yesterday, and shrinkflation still exists. Prices are still going up. You're getting less quality. You're getting less product for your money. Here's a box of Life cereal. This was like $5. It's 13 ounces. Look at this box. Does this box look small to you? Now, I have pretty good sized hands, but I mean, I can just hold that from pinky to thumb easily. 13 ounces. The box, extremely. I mean, you can visibly see the box is much smaller than they used to be. 13 ounces. This was like $5. Went and got a bag of Lay's chips. Look at how little this bag is. $5. $4.97. Okay? Look at how little this bag is. I mean, it is quite noticeable, right? I mean, $4.97, ladies and gentlemen, for this little bag of chips. Shrinkflation is alive and well. And look, there's a lot of products that kept the original box size, bag size, but they're putting less product in the box and bags, but charging you more. Now, I don't know. Is this inflation? Are they just purposely sticking it to us? One thing I do know is the box of Life cereal and the bag of barbecue chips is a lot smaller, and there's less in them, and I'm paying more. So I don't know how people are doing. I think about, families, large families especially, how in the world they're paying these gas prices, the utility prices, a bag of chips, some Life cereal. And I know you're going to just ridicule me and roast me for having some Life, but every once in a while I like a little bowl of cereal. I like some chips. You got to live, right? But we'll get a good workout in tomorrow. But how are people doing this? I really don't know. It's shocking just to see how things are shrinking, but prices are exploding. Comment down below. Let me know your thoughts, what you're seeing at your stores, whether it's a retail store or the grocery store. How much have your grocery prices gone up? What are you cutting out? Let us know some things that you're seeing, what you're thinking, and where you think all this is going. God bless. Have a great day.